What's up, guys? Welcome back to Everyday Money. Working out in the garage today, got the old ratty old sweatshirt on, and I was thinking about this because I've seen this asked a lot of times, and I've just wanted to do a video on this for a while. Is what if I had $100,000, or if you had $100,000, what would you do with it? What would you invest it in? What types of stuff would you get into? And so like I said, let's get down here and let's put it down on video. So if you ended up with $100,000 free and clear, so you know, whatever, however you came about that after taxes and everything, you are sitting on $100,000. What is the thing that you would do with it? And always keep in mind when I do this, I've got to tell you guys, it's not a recommendation to buy, sell, or hold a stock or crypto or get into any kind of business stuff. I'm not a financial advisor. I'm not your financial advisor, but this is what I have done. This is what I would do if I was out there with just $100,000 and I didn't have any investments, I didn't have any rental properties, I wasn't running a business already, and was just a normal person. So the first thing that I would do is I would get rid of any type of toxic debts. These are the things that are going to really just drag you down over the course of your life. And if you come into $100,000, be it from, you know, you win the lottery, an inheritance, you're whatever, you've saved $100,000, these are the first things that I would get rid of. Any type of loan that has an interest rate of probably 6 or more percent would be really high on my target list. So we're talking about any type of credit card debt. Because credit card debt, if you haven't looked at your statements and you haven't renegotiated your interest rate with your credit card companies, it's probably somewhere around 24%, like 2% a month on your credit card bills. Some of the better credit cards are doing like 18% annually, and even that is ridiculously high. So if you can get out from underneath that credit card debt, the more the better. If you have a car loan at a really high interest rate, like again, like 6, 7, 8%, I mean even like 5%, that's something that you're going to want to look at getting rid of. Now, you know, on the flip side, instead of paying it off with your $100,000 that you could put towards something else, you could sell the car and buy something, you know, a very nice used car or truck for $6,000 to $8,000 will get you something that's decent. It's not a great car, but it'll get you around until you have more money to play with. Another thing to get out from under, if you have these and you're being crushed by them, would be something like student loans. Those sorts of things are the things that can really hold people down over the course of their lives and just really, you know, make it so that they can't get ahead. Now, some of you guys out there that went to medical school, some of you guys that went to law school, those may be able to be easily paid off with your salary. But if you guys are sitting under a crippling amount of debt and you got $100,000, you pay that stuff off. The things that I wouldn't worry about as far as debts are concerned, low interest rate mortgages, like, you know, 2.875, 3.25%. Pay those, because we're going to make way more money in the markets. We're going to make way more money with investments than you're going to be paying on that mortgage note, and then that money is the amount that you owe is also going to be decreasing over time due to inflation. I also wouldn't pay off any really low car loans right away. Anything that's 0 to maybe 2%, just let that ride. Pay that thing off, because we're going to be making more money with that $100,000 than it would be worth to pay those things off. So the first thing that I would do is get rid of any of those toxic debts, things that are holding you down, things that are 5, 6, 7 plus percent. Let's get rid of that and get us back to a clean slate. So whatever amount that takes, that's just what it takes. The second thing that I would do is anything that I didn't use for that debt payoff thing. We're going to say that we're going to kind of make some assumptions saying that you maybe didn't come into this with any debts. So you have that full $100,000 if you didn't use it to pay off some debts. If that is the case, the first thing that I would do is probably take all of that money and stuff it into a total stock market index fund, some sort of low-cost index fund that's not going to eat away at your money with a bunch of goofy fees and stuff, and it's just invested in the total U.S. stock market. That's going to provide you a return on that money of about 10% annually, and really in the last 10, 15 years, it's been quite a bit more than 10%, but for the time being, that can be your long-term savings account. Even though it's not really a savings account, it's an investment account. It can go down in value, but what it will do for you is, instead of a savings account going down in value due to inflation, at least a total market index fund like VTSAX, VTI, FSKAX, whatever, that will get you about 10% annually, no matter what, and it will allow you some time to make some good decisions on some investments while you are still making money and not losing it to your savings account. And that's where I keep all of my saved money I keep it in VTSAX, Total Market Index Fund, very low cost, and it just has continued to go up over time. The third thing that we're gonna do, if you didn't pay off debts, you got your money into some sort of total stock market index fund. Also with that index fund, there is a chance that it could go down in value. We have the stock market go down, 10, 20%. You could be in a spot where you lose 10 or 20% of that money, but over the long term, it does go up over time. Historically, it has never gone down permanently, so that I consider that money pretty safe over a long period of time. Third, I'm going to buy a piece of investment real estate. Now you can look at buying a single family house. You can look at buying an apartment building. But right now I found that a lot of those deals are just overpriced for the amount of rent that you're going to be able to collect on them, and they're no fun. Regular real estate rental deals, landlording is not a lot of fun. Trust me, I did it for 7 or 8 years. I switched over to short-term vacation rentals, and that is where I would focus your efforts, because you can buy a vacation rental for 10% down, and for conforming loans, and up to like $2 million or something ridiculous with a jumbo loan with a 10.01% down second home loan, and that will give you the ability to purchase a piece of rental property that's going to produce probably somewhere between $7 to $10, maybe $15,000 a month in gross rents. Up to about, if I had $100,000 to deal with, and that's all I had, I'd probably look for something in the range of $500,000 to $750,000 in a very popular market like the Smokies, or a beach market like Destin, or the Forgotten Coast, Emerald Coast. Places like that where tourism is high, where people have visited there on a short-term basis for decades and decades to come. And the reason why I would invest in that is because that's going to give me the maximum amount of cash flow for my down payment, because you're going to be getting a second home mortgage. It's going to be a vacation home. You are going to have to, you'll be required to stay at those places for like 2 weeks out of the year, which really, if you're forced to take a vacation for a couple weeks out of the year to your luxury vacation home, I'm not going to cry a river over that. But what you're going to get out of that, you're going to get a cash flow. You're going to get a ton of cash flow. Your cash on cash return with a 10% down loan is going to be through the roof, way higher than a landlord type of style thing where your cash and cash return may be 10 or 15 or 20%. You're going to be looking at cash flows or cash and cash returns probably north of 50%. On top of that, you're probably going to be making huge amounts of appreciation. You're going to be getting large amounts of note pay down, because again, you've purchased a $500,000, $750,000 building. And you're going to be getting tax deductions to offset all of that income that you are getting. So if you made that down payment on that residential rental property, that short-term rental, you're at 10% down, you're looking at $50,000 to $75,000 plus some closing costs, probably, plus a little bit of fixing up and redecorating and things like that. You're going to be probably left with somewhere between $20,000 to $40,000 that you can leave in that account. It's going to make 10% a year, and you can take those profits that you make from that short-term rental, or that if you want to buy a long-term rental, take that, put that back into that VTSAX, VTI savings account, savings account, investment account, and just continue to let that semi-passive income that you're making with your rental property go into that investment account, make that passive income off of that, and then you are on your way. And you can just start growing from there and scaling from there, and just continually increase the amount of money that you have on hand, continually increase your income until you are, till you get to wherever that you want to be. So guys, that is how I would invest $100,000 if that's all I had at any given time. If you guys like this video, if it helped you out, hit that thumbs up button for me. If you haven't subscribed yet, hit that subscribe button down below, hit the notification bell so you don't miss anything that I put out on this channel about personal finance. I appreciate you guys watching today, and I'll see you in the next one.